Good evening, everyone. Welcome back. So, today we'll start with this topic around the audit reports. So, I would say a very important element in relation to the audit process. Why? Because all of these audit procedures that the auditor carries out, a lot of activities that you perform, it all comes down to the audit report. Yeah, because that's what the client is waiting for. In some of the cases, the audit may be going on for months. In some of the cases, it may be going on for, let's suppose, 15-20 days. But why is that done? Because eventually the company is looking for an audit opinion. Yes or no? And how is that provided? That is provided to the company in the form of that audit report. Yeah. So if you talk about audit, as a part of this audit, there are audit services which are provided by the auditor to the entity. But in terms of the deliverable, of course, it's a service which is provided, but in terms of the deliverable, this is the only deliverable that goes out from the auditor to the entity. Yes or no? Yeah. So that's why we can say it is the most important document, or you can say the most important element of this entire audit process. Now, as regards this audit report, now we have this requirement as per the auditing standards that the report has to be in writing. Means that doesn't mean it has to be handwritten. So means it has to be documented. It has to be in writing. Means it can't be an oral thing that the auditor has conveyed that the financial statements reflected true and fair view. Okay, so that is not something which works. It has to be in writing. And in relation to the audit report, there are again various requirements. Okay, and if you talk about those requirements are in relation to the format of the audit report, the contents of the audit report, and even if you look at some of the legal requirements, for example, Companies Act, it talks about some of the specific areas which the auditor needs to look into and comment upon in his audit report. Yeah, so some of these areas, what we will do is we'll just try to look at with the help of actual audit reports. We'll just try to pull out the annual report of a company, get into the audit report of that company, and with the help of that, we'll just try to understand all of those elements. Now, before we get on to that audit report, let's try to understand about the auditing standards, because in relation to the audit report, we do not have only one auditing standard. Okay, we have various auditing standards which deal with different sort of you can say requirements related to the report. So when you talk about SA 700, so this primarily talks about the opinion, the form, the content of the auditor's report, wherein you do not find any modification. Okay. Now, if let's suppose the modifications are required to be included, then you go to SA 705, which will talk about the modification, the types, and the situations wherein you will get onto the modifications, right? Similarly, if let's suppose the auditor plans to include any emphasis of matter, or there is any other para which the auditor wants to highlight, which you also call as other matter paragraph. So for that, you have this SA 706. There is another part, or you can say the content of the audit report, which is relevant in relation to the listed companies as of now, wherein some of the key matters in relation to the audit of the financial statements is required to be discussed. So it's not really an observation as such, it's basically a discussion, which is very commonly called as CAM. Now we have this another auditing standard which talks about it, SA 701, right? Now, some of these requirements we can just say relate to the audit report, and some of these situations which will bring some of those requirements, for example, modification, for example, EOM, we'll have to understand depending on the situation, depending on the observations that the auditor will have, depending on the misstatements at times, if at all those are there in the financial statements. Okay, we'll just try to look at all of those situations as well. Now, quickly, if you talk about the format, okay, so now when it comes to the audit report, so we have a format defined for the audit report. So you can't say that it's like any other report which the auditor may prepare as per his desire. See, it's very specific to the entity, number one. And as regards the reporting requirements, certain elements, means the content to be included in the audit report, is also defined. Further, the order of those elements of the audit report is also defined, means you can't really change the order. For example, if you look at the screen right now, so we have all of these contents which you'll see in the audit report. Okay, some of them may not be applicable, but if at all those are applicable, you will see that in this particular order. It basically starts with the opinion of the auditor, and then you have the basis for opinion. Now, if let's suppose somebody wants to give the responsibilities of the auditor first of all, or the management responsibilities first of all, before getting on to the opinion. So will that be possible? Answer is no. Why? Because that's where we are talking about the order and the format. Understood? So that's why one needs to understand there is a proper format of the audit report which the auditor needs to follow, and this is something which will also be required to follow when you eventually get down to the audit report, when you will be preparing the audit report. So this is the format you'll have to follow. Okay, and this is the particular order. In fact, most of the content that you see in the audit report, say for example, if you talk about opinion para, if you talk about the para related to responsibilities, whether that of the management, whether that of the auditors. Now, therein again, you will find it's a defined content in most of the cases. I'm not saying it will be exactly similar for all, but most of the content is defined, which the auditor will have to necessarily include. Okay, so there's nothing much to change, right? Except for some of the situations, for example, modification, for example, going concern, if at all it arises. And similarly, if you talk about applicability of some of the paras of the auditor's report, because in some of the cases they may be applicable, in some of the cases they may not be applicable, right? So that's how you look into that. So now, as a next step, what we will do is we will get on to one actual audit report, because our objective is what? Our objective is to understand the audit report, the contents therein, and in respect of those elements of the audit report, the content which is there, Our objective is to have an understanding of that. In fact, a detailed understanding of that, because only then you will get to know as to what is included, what is not included, and why is that required to be included. If at all any sort of drafting is required, how do you draft that? Because at times you may be asked to draft a particular para of the audit report. So, of course, in the question, you will not be asked to draft the complete audit report, but some of the sections, some of the paras, you may be asked to prepare that. So that's why it's good to have an understanding. See, in this case, couple of points become important, and which is a matter of concern at times, which I have seen from your side as well. So one, of course, is an understanding that you require, but particularly when it comes down to drafting of some of these types of documents. Okay, so therein the language part also becomes important. Yeah, so there are a lot of things which you can always put down in your language in the exam, except for the technical terms, which you can't really change. But when it comes to the drafting of the audit report, okay, so therein the alignment of the language that you have has to be in place with what is required to be done. You can't really change that significantly. Of course, you can't do that verbatim, okay, because that would mean that you'll have to mug up the entire content, which is not possible at times. But the idea is to get as close as possible to what is required to be done. Understood? So with that thought process, we'll just try to look into some of these elements. Okay. So now let me just pull out an annual report. Just give me a minute. Yeah, so just give me a second. I'll open one audit report. Okay, so here we go. Right? So I'll just share this now. Okay, so there we are. So what I've done is have pulled out this audit report of a company, Tata Consultancy Services, TCS. Okay, and in this case, we'll just try to understand the contents. So to begin with, what do we have? We have this title. Now see, audit report is issued on the financial statements, right? So what do you say? Independent auditor's report. Yeah, so that's the report which you're issuing, and the report has to be issued by an auditor wherein the independence is a primary requirement. So that's why, what do you call it as? Independent auditor's report. Correct. Then comes the point, who do you address this report to? Yeah, so you'll address this report to the members of the company. Okay. So that's why, what do you see? To the members of TCS. And then you have report on the audit of financial statements. Now, in this case, what are you doing? You can say it's a sort of subtitle, that it's a report on audit of standalone financial statements. Then comes the opinion para. Now, over here, we will spend some time. Now, what is this opinion para? Now, if you look at the objectives, an auditor is required to issue an opinion. So he'll be expressing as regards the truth and fairness. Correct? Now, in this case, what you will find is that the auditor, before he gets on to the opinion, he's also talking about what he has done. Means he is also briefly talking about what has been done by the auditor, and then he will be getting on to the opinion. Okay, so let's try to understand, and the way this is drafted, I think that is very important. Idea is not to get onto the language, but idea is to just try and understand the way it is getting drafted by the auditor. So let's look at this opinion para. Okay, now in the opinion para, auditor is saying that we have audited standalone financial statements of the company, right? So he's talking about what he has done. So he's saying, I have audited the standalone financial statements, which comprise. Now, if you look at the financial statements and if you talk about the financial statements, what do they include? We all understand it will include balance sheet, P&L, statement of changes in equity, cash flow, notes, some of these things. But in this case, every time when the auditor is writing something, auditor is just trying to be as specific as possible. So that's why even though he's saying I have audited the financial statements, he will now be explaining what do they include. So he says which comprise standalone balance sheet as at 31st March and standalone P&L, statement of changes in equity, statement of cash flows, and notes to the financial statements, including material accounting policies and other explanatory information. Okay. So auditor is just trying to explain everything about the financial statements in terms of the content that you'll have, right? So he's saying this is what I have audited. Now in the second para, under this section, so you will have various sections of the audit report. So the first section is what? Opinion para. Now he will be talking about the opinion. So now he's saying, in our opinion, and to the best of our information, according to the explanations given to us, aforesaid standalone financial statements give the information required by Companies Act in the manner so required and give a true and fair view in conformity with accounting principles generally accepted. And then he's saying of the state of affairs of the company. What does it mean? Balance sheet. Its profit means P&L. Changes in equity means statement of change in equity. Its cash flows means statement of cash flows. Okay. So here again, when he is giving the opinion para, and when he is talking about the opinion, once again, he is commenting in a way on all the elements of the financial statements. Yeah. Can you see this? So this is how you will find that the auditor is trying to be specific in terms of various requirements that you have. Okay. And this is what is generally found in terms of the communications by the auditor. Okay. Because this is again a sort of communication in the form of report from the auditor to the members. Correct? Now, once the opinion is given, so what is the first part? Opinion. Now, in this case, if you look at the opinion para, you'll always have a header. Can you see this? There's a header to this opinion. After that, if you look at the next para, so what do you have? Basis for opinion. Okay, so there again you have this header. Okay, so you have this header opinion, you have this header basis for opinion, correct? Now, in this case, see if one has to find out whether this opinion is clean or not. If let's suppose that is something one needs to find out. So this can be easily identified from the header itself. Why? Because if let's suppose the opinion is clean, means there is no modification. Let's suppose there is no modification. So what will happen? You will have this header saying opinion. See, if there is a modification, then the header will say modified opinion. Understood? Then the header will specify the opinion is modified. But in this case, the opinion is not modified. Yes or no? So that is what we found also. Okay, so if you look at the opinion, it's not modified. Correct? He's saying that it give the information required, give a true and fair view. Yeah, it says it give a true and fair view. So the opinion is not modified, correct? Yeah. So of course, one will read that. Through reading, one may get to know about it. But whether the opinion is clean or not clean, that you can always get to know even if you don't read that. Okay. Next, when you talk about basis for opinion, here again, what will happen? See, if the opinion is modified, then the auditor will say basis for modified opinion. If the opinion is not modified, auditor will say basis for opinion. Means that wording modified will get added. But if you don't see the word modification, qualification, adverse, disclaimer, what does it mean? Means the opinion is clean. Okay, means the opinion is clean. Clear? Clear on this? Now comes the point that what is this basis for opinion para? So let's try to understand this. See, when it comes to, you can say a conclusion sort of. So if let's suppose you conclude something, okay, you give your opinion. So what do? You will always try to explain about it. Yes or no? Or somebody may ask you that why are you doing this? Okay, what is the reason? What is the rationale? So in a similar manner, the opinion which the auditor has framed, he is now trying to explain the basis for that opinion. Okay, so it's not that the auditor has given the opinion, that's it. No, he is also giving the basis for doing that. Understood? So in this para, what do you get to see? You get to see the basis which he would have considered. Okay, so that the stakeholders can get a clarity as to what is it the auditors have done. What has become the basis for doing this, right? So now, if we look at the basis, so what do you have? So now the auditor is saying, we conducted our audit in accordance with auditing standards. Our responsibilities under those auditing standards are further described in Auditor's Responsibility for Audit of Financial Statements section of our report. Now, this is important. See, if you look at this audit report, you would have observed that this report contains various sections. Yes or no? You have this opinion, basis for opinion. Then you can also see there's a section coming up, CAM, key audit matters. Similarly, various other sections are there in the audit report. Now, in this case, what is it that auditor is trying to do? See, auditor is just briefly trying to touch upon his responsibilities. Okay. Maybe that's important for him to include that in the basis of opinion. But as regards his responsibilities, it seems that's quite extensive. That's why, and it also seems that somewhere in the audit report, his responsibilities are also required to be included. Now, there are two ways to go about it. Either the auditor will not give the responsibilities in that section, include it here, but that is not possible. Why? Because there's a fixed format. The other way is auditor can give the responsibilities in that section and also repeat here. That will be a duplication sort of. So that's why, what is he doing? He is just informing the user that as regards my responsibilities, you can go and refer that section of the audit report. Okay. So he has brought out that my responsibilities, which I was required to sort of, you can say, take care of, fulfill, those are also specified in the audit report itself, but in a different section. So you can go and read that. Okay. So basically, idea is what? Idea is that he's just trying to give the messaging sort of, okay, that something which was required to be done on his part, he has done that. Understood? Then he is talking about independence, which is, you can say, the core area. And that's how the audit report also begins with. So even if you look at the header, we have just seen that it talks about the independent auditor's report in terms of the title, right? Now, in this case, auditor is also talking about independence. So he's saying we are independent of the company in accordance with the code of ethics issued by ICAI, together with the ethical requirements that are relevant to our audit. And we have fulfilled our other ethical responsibilities. Okay. Now, auditing standards are required to be taken care of. He has done that. There were certain responsibilities. He's saying I have fulfilled that. Independence, he's saying I've looked at it. Code of ethics, he's saying I've looked at it. Now he's saying we believe. Now comes the most important sentence. Okay, so he's saying we believe that the audit evidence we have obtained, okay, is sufficient and appropriate to provide a basis for our opinion. So now he is saying that what has become the basis? Sufficient and appropriate audit evidence. Obviously, because if he were to audit, how would he do that? He will need the evidence. So he's saying I have obtained the evidence. And that's in line with the auditing standards. That's in line with the objectives of the audit. Clear? Yeah. So over here, auditor has talked about the opinion and the basis for the opinion. Clear? Yeah. Any questions?
No, sir. Clear.
Okay, sure. Now, see, the next section is CAM. So CAM, I'll just park for some time. I'll move on to another section. Okay. Other information. Now, what is this other information? Now, again, on this other information, at times you see some confusion. So let us first of all understand the context. Now, in the audit report, what are we talking about when we say other information? Now, in fact, for your understanding, what the auditor will do is, to begin with, he will always explain about these things. Okay, for example, you may not be knowing about it. Same goes with the stakeholders. So that's why auditor will explain about it. So we can read this para, and through the para only we should get the clarity. Okay, so let's read this. The company's management and the board of directors are responsible for other information. Other information comprises the information included in company's annual report, excluding the financial statements and audit report thereon. So what does it mean? So let's try to understand. Okay, I'll just share one file. Okay, we'll just try to understand, because this is an important element. Okay, just give me a minute. So let's suppose you have an annual report. Now, what is the annual report? It's a document, you can say. Okay. Now, in respect of a company, generally, what will happen? A set of documents is, you can say, released, or you can say given to the stakeholders in the form of an annual report. For example, if you look at that document, okay, which we were discussing, the audit report, that document is running into hundreds of pages. Okay. Now, can we say that this document is all about audit report and the financial statements? Answer is no. A lot of other information is also contained in that document. If you want, I can just flip through that document maybe later on, just for your reference. Otherwise, you can also pull out annual report of any company and you will get to see that. See, generally, what is the set of document which is put down and which in a combined manner is called as annual report? So we can say financial statements, audit report, okay. Let's suppose if you talk about director's report, so it's a separate document, right? Similarly, there is a document that you called as MD&A, management discussion and analysis. You also see this reporting disclosures around ESG. Yes or no? Now, in this case, what has happened? All of these different reports or information are given at one place in a combined manner. So it's not mixed up, but they are going out together in a single document. You can say all of these documents are put down in a single file. Okay. Of course, you will run through the pages and each and every document will come out separately, but it's combined. Now, what is the problem? If let's suppose that is combined, so how does it impact the user? Let's suppose in the financial statements, revenue has been reported as rupees 1050 crore. Let's suppose that's the revenue which the company has reported. Okay. And somewhere in the director's report, somewhere, let's suppose in the MD&A, there is a discussion around revenue. Okay. Wherein the revenue has been reported as, let's suppose, 1055 crore. Now you may be thinking, how is this possible? Are we talking about two different years or maybe some exclusions, inclusions? We don't know. Okay. But as far as the reporting year is concerned, the answer is yes, we are talking about the same reporting year. Now, if let's suppose we are talking about the revenue of the company, if let's suppose our understanding is that we are talking about revenue of the company, the way the revenue is required to be considered, then what will happen? User who has got this document annual report, when he reads the financial statements, understands about the revenue and thinks the revenue of the company is this number. But somewhere within the same set of documents, he may come across this document wherein he finds the revenue is different from what is there in the financial statements. Now, as a user, if let's suppose you happen to be the user of the financial statements and you have this additional information which is given along with the financial statements. Now, what will happen? You will get confused. Yes or no? You'll get confused. Yeah. And what is going to be your confusion? Your confusion will be that revenue at one place is reported as 1050 crore. At another place, it is 1055 crore. So which number is correct? Yes or no? Yeah. So this creates a confusion. So the reliability is impacted in relation to the financial statements. Right. So when we talk about other information in the audit report, now let's come back to the audit report we were discussing. Now, what do you mean by other information? Other information means any information which goes along with this audit report and financial statements. Okay. So in this example, we can say director's report is the other information. MD&A, other information. This disclosure is the other information. Right? Now, what is it that the auditor is required to do in relation to this? And what is the reporting requirement in relation to this? So there are a couple of points here. See, as an auditor, he is not required to audit the annual report. Now, this point is very important. See, this annual report is not required to be audited. That's not the scope. Okay. So auditor is required to audit financial statements and issue the audit report. Right. So that means it goes out only on the financial statements. So that's why it's very important for the users to understand that the other information which they get to see, right? First of all, that is not audited by the auditor. Yeah. At least a clarification in this regard, if given, so that will not create any sort of confusion. That the financial statements are audited, but if you look at this other information, we don't know. At least we have not audited. Yes or no? Yeah. So that's one part to it. What is the other part? See, if let's suppose some information is going along with the financial statements, and the auditor is saying, no, I have not audited the other information, so I don't know whether the other information is right or wrong. I don't know. Therein, a responsibility has been placed upon the auditor. What is that? Not to audit, but to ensure consistency in this other information, right? Because he can at least check, ensure that the numbers therein are consistent with what is there in the financial statements, because that's important for his audit as well, because he may not know why the number is 1055 when the financial statements are showing 1050. But how can he do that? He can do that when the management is able to provide this other information. Okay, because at times it may happen that the management is not ready with this other information by the time financial statements get finalized and signed off and the audit report is issued. So in this case, what does he do? He can't do anything about it. Is he supposed to wait? The answer is no. Why? Because some of this information may be dependent on the audited financial statements. Okay, so generally as a practice, what will the auditor do? Auditor will be looking at the draft documents. Okay, some of this additional information will always be available in a draft manner. So auditor will go through that draft information, right? And that is what he will just check, ensure in terms of the consistency. So that's the only expectation in respect of the other information, correct? So over here, we have talked about other information, which is included in the annual report. So now let's come back to the audit report. And now I think we'll be able to understand this in a better manner. Just give me a minute. Now the auditor is talking about the other information to begin with. Yes or no? So the company's management and the board of directors are responsible for other information. Other information comprises the information included in company's annual report, but does not include the financial statements and auditor's report. Company's annual report is expected to be made available to us after the date of the auditor's report. So he's saying that is not made available to us by the time we have audited, by the time we have issued the audit report. Now he is also clarifying that our opinion on the standalone financial statements does not cover the other information. And we will not express any form of assurance conclusion thereon. Okay, so it's a clarificatory point which he is including. In connection with our audit of standalone financial statements, our responsibility is what? Now is also explaining the responsibility. Read the other information identified above when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the financial statements or our knowledge obtained in the audit or otherwise appears to be materially misstated. That's it. Means a consistency check is required. Audit is not required. And that's why he's saying, I have not audited that. I have not done any sort of assurance conclusion as well. Forget the audit. Okay. He's saying, I have not performed any procedures on this. The only thing which I am doing is ensuring the consistency check, and that too, if the management provides that to me by the time my audit report is issued. Because after that, I'm done. I'm through with this. Okay. After that, I can't do anything about it. Understood? Clear on this? Right?
So, so
Yes.
basically, if it is made available to him,
Yes.
and what will the auditor do if there is some inconsistency? Where will he provide information regarding that to the users?
So
Will he
it's not
change this para?
right. No, no, no. So in that case, the idea is, see, let's again understand the audit process. See, if there is any audit observation, let's suppose if you talk about this particular area wherein the auditor is checking the consistency, okay, and he finds something is inconsistent with what is there in the financial statements. Or let's suppose he is auditing the financial statements, he finds any misstatement there. Whether that is material or immaterial, forget that for the time being. What is the first thing auditor will do? Will he straight away get on to the reporting? Answer is no. The first thing is he reaches out to the management. He will ask for the explanations in relation to his observation, to also find out, to ensure whether his observation, whether that inconsistency which he has observed is correct or not. Maybe there is some understanding gap. Maybe there is some additional information which needs to be provided to him, basis which his observation will go down. If let's suppose he has discussed that with the management, and the management is also confirming that what the auditor has understood is correct, there is actually a misstatement, or in this case, there is actually a inconsistency. Now, inconsistency would mean that something is wrong in the financial statements at times. So that will be a misstatement. Or inconsistency may mean that something is wrong in the other information. Now, here again, what will the auditor do? Auditor will ask the management to rectify that. Simply. Yeah. He will get that rectified in the financial statements, in the other information. If the management is doing that, then will there be any reporting in respect of that? Answer is no. Why? Because there was an error which has got corrected, and that's the objective. That's why the auditor has come. Auditor has not come to report something which has got corrected. Auditor has come to ensure that everything is fair and report upon, or report in respect of those areas which are not addressed, which are not taken care of by the management in a way. Yes or no? Okay. So that's why he will not get on to the reporting if that is corrected. But if that is not corrected, that's where he will have to comment. So if you talk about this other information, Prashant, if let's suppose there is inconsistency in the other information, he'll ask the management. If the management doesn't do that, then of course he'll have to understand the repercussions. He'll have to find out which document is wrong, whether the financial statements are wrong or the other information is wrong. If he believes financial statements are correct, then he will say, he will comment about it, that there is some inconsistency in the other information, which I have observed. Understood? And this communication will also be made to the management, to TCWG. Why? Because that may be important. And of course, we are not talking about small errors. Okay. We are talking about maybe those things which are significant. Right?
Yes, sir. Thank you.
Sure. So now moving further, see, there are some sections in between in respect of EOM, going concern, and also in respect of CAM, which we have skipped. Okay. And if you look at this audit report, some of those are not applicable to the company. So that's why those are not appearing. So what we will do is we'll just pick it up separately. As of now, what I'm doing is I'm just moving in the order of this particular audit report. So now what is next? Now the auditor is talking about responsibilities of the management and board of directors in detail. Okay, now it's a detailed discussion. Now, why is this important? And in fact, immediately after this responsibilities of management and board of directors, auditor is discussing his responsibilities. So if you remember in basis for opinion para, auditor had given a reference of this particular section. Yes or no? Now, what is the objective? See, the objective is to make the users understand as to what the management has done and what the auditor has done. What the management was supposed to do, what the auditor was supposed to do. See, when it comes to this financial statements and the audit reports, what will happen? They will always go together. In fact, this financial statement is a kind of annexure to the auditor's report. Okay, so that's how it's required to be looked at. So in this case, if there is a stakeholder who is looking at both the documents, so they should not misunderstand that the financial statements belong to the auditor. So actually, who is the owner of the financial statements? Company, management, board of directors. They own that. They prepare that. Auditor doesn't prepare that. If there is misstatement in that, if there is no misstatement in that, who is responsible? Management. Right? In terms of the preparation, of course, in terms of audit, auditor will be responsible. So that's why when you look at both these documents, audit report and the financial statements, one has to have this clarity. Means audit report belongs to the auditor and the financial statement belongs to the management. And in terms of the financial statements, its preparation, the process which is followed for financial reporting, some of the controls which are required to be put in place, some of the legal requirements which the company needs to follow. All of those are the responsibilities of the management. So that's why auditor will once again explain in detail all responsibilities of the management and the auditor separately. But when we talk about the responsibilities, please remember our context will always be the financial statements. Okay, so you should not get confused that is it the only thing which the management is required to do? Answer is yes, but that is only in relation to the financial statements. Okay, so we can just quickly flip through some of the responsibilities of the management, and of course then we'll also flip through some of the responsibilities of the auditor as well. The company's management and the board of directors are responsible for matters stated in a particular section of the Companies Act. With respect to preparation of these financial statements that give a true and fair view of the state of affairs, P&L, changes in equity, cash flow, including accounting standards which are specified under the Companies Act. This responsibility also includes maintenance of adequate accounting records in accordance with the provisions of Companies Act for safeguarding assets of the company and for preventing and detecting frauds and other irregularities. Selection and application of appropriate accounting policies. Making judgments and estimates that are reasonable and prudent. Design, implementation, and maintenance of adequate internal financial controls that were operating effectively for ensuring the accuracy, completeness of accounting records. Once again, please read this line. Relevant to the preparation and presentation of financial statements. Okay. In preparing the financial statements, management and the board are responsible for assessing company's ability to continue as a going concern, disclosing as applicable matters related to going concern, using the going concern basis of accounting unless the board either intends to liquidate the company or cease operations or has no realistic alternative but to do so. The board is also responsible for overseeing the financial reporting process. Understood? Yeah. So all of these aspects have been explained. Now the user will get a clarity that as far as the preparation of the financial statements is concerned, whose responsibility is that? If you talk about the financial reporting, if you talk about the controls around that, right? If you talk about the presentation, okay? If you talk about the overall process of this financial reporting, who is responsible for that? It's not the auditor, it's the management, right? But now comes the question that if all of this belongs to the management, required to be done by the management, what is the auditor required to do? Yes or no? So you may have a question that what will the auditor do then? Correct? So let's try to understand. See, the auditor's responsibility for audit of standalone financial statements. So now, if you look at the responsibilities of the auditor will explain in detail. So this section will again be a detailed section. Our objectives is to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, and to issue an audit report that includes our opinion. Okay. Now, in this para, auditor has clarified one point. What is that? He is saying our objective is what? To obtain reasonable assurance. Right? Right? This is a very important part. He is talking about reasonable assurance here. Now comes the point, what is reasonable assurance? So that again he has explained. Reasonable assurance is a high level of assurance, but is not a guarantee that audit conducted in accordance with standards of auditing will always detect a material misstatement when it exists. Okay. Misstatements can arise from fraud or error and are considered material if they could reasonably be expected to influence the economic decisions of the users taken on the basis of financial statements. Right? So the auditor has clarified that please understand what I have obtained is reasonable assurance. I'm not giving any absolute assurance. There is no guarantee that I will be able to detect any material misstatement. Sorry, every material misstatement, I should say. Correct? Then he has detailed out the responsibilities. So there are a lot of responsibilities which he has explained over here. As part of an audit in accordance with auditing standards, we exercise professional judgment, maintain professional skepticism throughout the audit. Then he is talking about various procedures. So he's saying we also identify and assess the risk of material misstatement. obtain an understanding of internal control. Okay. Evaluate the appropriateness of accounting policies. Conclude on the appropriateness of board of directors use of going concern basis. Evaluate the overall presentation, structure, content of financial statements, including the disclosures. Right? We communicate with those charged with governance regarding, among other matters, the planned scope, timing, significant audit findings, including any significant deficiencies in internal control that we identify during our audit. We also provide TCWG with a statement that we have complied with relevant ethical requirements regarding independence and to communicate with them all relationships and other matters that may reasonably be thought to bear on our independence and where applicable related safeguards. From the matters communicated with those charged with governance, we determine those matters that were of most significance in the audit of financial statements and therefore the key audit matters. So he is also giving a reference of the responsibilities in relation to the key audit matters. So we'll talk about key audit matters in some time. We describe these matters in our audit report unless law or regulation precludes public disclosure about the matter or when, in extremely rare circumstances, we determine that a matter should not be communicated in our report because adverse consequences of doing so would reasonably be expected to outweigh public interest benefits of such communication. Okay. Then comes the next section. Now, this section is all about various, you can say, regulatory requirements. Now, let's try to understand what is this section. See, this section is all about different legal requirements which have been placed upon the auditor. For example, let's suppose a particular section of the Companies Act requires auditor to perform some procedure in relation to financial statements audit on. So the auditor would have performed. Yes. Now the auditor is also required to specifically comment upon that point. Now there are two thought processes which may arise basis this. One may think that if, let's suppose, this particular section doesn't talk about this requirement, will the auditor not be taking care of that? Answer is no. Auditor will be doing that procedure even then, even if it is not specified. Then comes the next point. Then why it is required to be specified? Because that's what the law requires. See, perhaps there are some legal requirements or there are some requirements which the law believes are important. So that's why the auditor is not only required to perform them specifically, but the auditor is also required to comment upon them specifically. So you can say a list of all of those legal and regulatory requirements has been compiled. Okay. And all of that has been put down in this section, reporting on other legal and regulatory requirements. So this again is in the context of financial statements only. Okay, so you should not be thinking that this is not in relation to financial statements. We are talking about any legal compliance. No, everything over here will be in relation to the financial statements always. Understood? Now, to begin with, what do we have? See, it talks about section 143, subsection 11 of the Companies Act, which talks about CARO. CARO, I'm sure you're aware of. See, what is CARO? You can say there is a reporting requirement under this section. And as a part of this reporting requirement, there are lot of points which the auditor needs to take care during the course of audit and also comment upon those points. So are we talking about only one or 2 points? No, there are a lot of points. Huh? Okay, so actually you can say it's a kind of checklist. Now, auditor is also required to comment upon those points in the audit report, in the main audit report itself. Now, there are two ways to go about it. See, either the auditor can comment upon that in the main audit report. If the auditor will do that, what will happen? Because there are a lot of such points. So that's why this audit report will become quite hodgepodge. Yes or no? There are so many points which you will have under this section, and unnecessarily this will become a bulky document. Okay. So what is the other way? Other way is, instead of putting down all of those points over here, what can the auditor do? Auditor can take care of all of those points in another document, and that document can be made an annexure of this section. Okay, so that will come out as an annexure of this section, right? Now, in this case, when you talk about annexure, what are those points which are required to be reported? All of those are covered in that annexure. Okay, so that's why in this particular para, auditor is giving a reference of the annexure A, wherein he has taken care of the requirements related to car. Okay, so what we will do is we'll just flip through some of those points related to Caro once we get into that annexure. So that annexure you can say is a part of this audit report. So the audit report currently that we are looking at, this is generally called as main audit report. Okay, and the main audit report will have some annexures. For example, Caro is an annexure to that. So annexure doesn't mean it's not an audit report. So that is also an audit report, and that is also a forming part of main audit report, but you will call it by different names because there are 2-3 documents. You'll have main audit report, then you'll have Caro, and similarly you'll have this report on IFC. Okay, so all of them are always looked at in a combined manner, but they are also covered separately. Okay, so that's how they are prepared. That's how you can say they are always presented. Then you can say there is another section 143 subsection 3 which talks about various points. Okay, so now when those points are covered, so the auditor is having a discussion around that. So he's saying we have sought, obtained all the information, explanations, etc., which is necessary for the purpose of our audit. Okay. Similarly, there are various other points, right? So I'm not just going through all of those points. So these are all legal and requirements. So the auditor is, you can say, performing the audit in respect of all of those points and specifically talking about those points over here, right? Then within this same section, under this point 2 and under the same section, section 143 subsection 3, there is a reporting by the auditor in relation to IFC. Okay, so the auditor is required to report in respect of the internal controls of the company with respect to the financial reporting as to whether they are operating in an effective manner or not. Now, once again, what will happen? See, if the auditor will be commenting upon this, so you can say this in itself happens to be a report in itself, kind of. It's a kind of report in itself. Okay. So now, what will happen to this? In relation to this audit report, or you can say in relation to this reporting requirement, similar to Caro, what do you find? Auditor will not be reporting over here. Auditor will be reporting in a separate document, okay, which he has called as Annexure B, and he is giving a reference of that Annexure B over here. And once again, the idea is what? Idea is to just give a clarity, okay, and just to make the documentation of this reporting requirement in a way which becomes easy for one to read and refer, right? So that's why it's not put down in the main audit report itself, but a reference of this annexure B is included. Okay, similarly, we have various other legal and regulatory requirement which the auditor is required to touch upon. Okay, now I'm not again going through each and every requirement unnecessarily, otherwise will not be able to end the discussion up. There are so many legal requirements. Once we are through with this, so let's suppose we are through with various sections of the audit report, then what do you have? It's required to be signed off. Okay, so currently, because it's an annual report which is printed, so what do you find? You don't see the signature over here, but when you see this actual audit report which is produced by the auditor, so what will you see? It's signed by the auditor. Okay, so first of all, the firm details are given: name of the firm, firm registration number, partner, membership number, right? Date and place. And then you have this requirement in relation to mention the UDIN. Now, what is this UDIN? Now, UDIN, you can say, is a kind of unique code which is generated by the auditor. See, only a chartered accountant in practice can generate this. Nobody else can generate this. And this is generated from the portal of the ICAI. Now, what is the objective of that? See, without this UDIN, this document is not considered to be authentic. Okay, this is not considered to be valid at all. Right? So that's why any assurance engagement that we have, or you can say any certificate, any report that goes out by the auditor, will always have this UDIN in place. Okay, yeah. Now, as a next part to the main audit report, what we can do is we can just flip through these two annexures also. And here again, when you look at these two annexures, see, you will be, I think, able to appreciate that how nicely auditor is just trying to give the reference, this cross-linking. So when he is talking about annexure A, so after that, you can see this. He's giving the reference. So he's saying referred to in para 1 under report on other legal and regulatory requirements section of our report of E1 date. And same way, if you go to the main audit report, he has given the reference of this annexure. Yes or no? So idea is what? If let's suppose user is looking at this document, so he is also able to relate to the main document it belongs to. Okay, so that cross-linking can be done in an easy manner. Yeah, so that's the whole objective around it. Clear on this? Yeah. Now, in this case, some of those points related to Caro are covered. And as we discussed, it's all about checklists. When you talk about PP, when you talk about inventory, okay, all of those points are included by the auditor in this audit report. And because this is also an audit report only, and because this is also given in the form of an annexure separately, so that's why this will also be signed in a similar manner with the same UDIN. Okay, now don't think that this UDIN will be generated again for Karo. No. So the same UDIN that you had for main audit report, because it's nothing but a part of that report itself. Yes or no? Yeah. So it's not a separate report. It's the part of that main report itself. So that's why that UDIN will also be given here. Right? Now, what is next? Next will be an XRB. So if you remember, reporting on IFC is applicable to the company. So here again, what will the company do? Same way. You can see the reference here. First of all, you can see the title, Annexure B to the independent auditor's report on the financial statements for the year ended so and so. So that there is no confusion. With complete clarity, it's given. Then it says a report on internal financial controls with reference to aforesaid financial statements under clause I of subsection 3 of section 143 of the Companies Act. And then the reference referred to in para 2AG under report on other legal and regulatory requirements section of our report of E1 date. And in a similar manner, you have this reference about this annexure B, about this report on IFC in the main audit report as well. Correct? Now, this report again has a specified format about the opinion, okay, about the opinion, and of course about the management's responsibility, about the auditor's responsibility, and in respect of what this internal financial control is all about. Yeah. And then you have this sign off by the auditor in relation to the audit report. Okay, so you have the firm details, then you have the partner details, and in a similar way, the UDIN, right? And then comes the balance sheet, or you can say the set of financial statements. You see, this financial statement actually is what it's a kind of annexure which goes to this audit report. Why? Because that's how they go together. Yes or no? They go together, right? But of course, on this financial statement, we don't need to do anything specifically, right? Our focus is going to be what? Our focus is going to be on the audit report right now. Now, in relation to this audit report that we have looked at, now there are certain sections. Let me just take you to those sections. Okay, so just give me a minute. I'll just share that document with you. Now, if you go back to this listing again, which talks about various content. So let's look at those sections which we have not yet covered. So one, it talks about going concern. It talks about CAM. Then there is also a thing around modifications or EOM or emphasis or this other matter paragraph. Now what we will do is we'll talk about those things. First of all, let's touch upon this going concern piece. Now, what is this going concern? If you remember, in the last session, we had this discussion around MUGC. Yes or no? Can you just quickly touch upon that? Maybe Prashant, if you'd just like to go through this. Okay, if you remember around MUGC, what was that? If you want to just summarize that, and what all reporting requirements we have as an auditor.
So the first assessment relating to going concern is to be performed by the management.
Right.
Af- So auditor will look into the management's assessment of going concern and
Right.
and will accordingly evaluate whether the going
Right.
concern assumption is appropriate or not.
Right.
After that, he will also look at if the going concern assumption is appropriate, but there is material uncertainty relating to the going concern.
Correct.
There are events and conditions that cast a significant doubt on the entity's ability to continue as a going concern.
Right.
So he would look into those events and conditions, and he
Right.
would inquire with the management. If he finds that there are events and conditions, he will inquire with
Right.
the management what is their plans and regarding those events and conditions which have casted a significant doubt. For
Right.
example, there is a litigation pending relating to an environment clearance on which significant penalty could be imposed, and the matter is pending. So how the company is going to deal with those situations, and what is the company's plan if
Right.
there is a new competitor which is coming up. So all these
Correct.
factors will be looked into by the auditor, and evaluation with the management's plans will be made done by the auditor. If the
Yes.
auditor is satisfied with the management's plan,
Right.
that management plan is appropriate
Right.
regarding it, so he will just make a mention that in the report that there is a material uncertainty
Correct.
relating to going concern, and the management has this plans for dealing with this situation.
Correct. Great. So now, when it comes to this going concern, okay, and in terms of this MUGC reporting, now this will not arise in all the cases. This will only arise when there is material uncertainty in relation to the going concern. Yes or no? So that's why you'll not find this section always in the audit report. For example, if you look at this audit report we discussed, did you find this section? Answer is no. But if let's suppose this company had a material uncertainty, that is when you would have found that MUGC section also. Okay. So idea is what? That when you talk about this particular requirement or this particular section, it's not a kind of checklist which is required to be put in place always with yes or no. This will come only when applicable, otherwise this will not be reported. So if this is not reported, it means it's not applicable to the company, and the company doesn't have any such concerns around it. Okay. Next, similar to this MUGC, there are a couple of requirements. One is in relation to emphasis of matter, and the other one is in relation to other matter paragraph. Now, these two again, what do you find? You will find that these two sections may or may not be there in the audit report. So, once again, if you go back to the audit report we just discussed, did you find these two sections? Answer is no. So, does it mean that it's skipped? Answer is again no. Why? Because you have this similar sort of understanding that we just discussed for MUGC. That only if it is applicable, you will see this. If it's not applicable, you will not see this. So if you don't find this, it means this section doesn't have a place. Okay, it's not applicable. There's no matter to be reported around EOM, around other matter. Now, what is EOM? What is other matter? That we will discuss slightly later today. Okay. Now, as a next step, what we will do is we will move on to this next section, CAM. Now, CAM is important, and CAM, you can say, is a kind of new requirement. Okay, it's a kind of new requirement. So now what is CAM? Let me just move on to CAM now. Just give me a minute. CAM means key audit matters. Now, if you look at this audit report, okay, and if you look at any other audit report, right, in most of the audit reports, you will find a common thing: content, format. That's sort of standardized, right? Even if you look at the content, what do you generally find? If you talk about the opinion is clean, you'll see the same language. The name of the company will change, the reporting year will change, otherwise it's all the same. So that's why year on year, if you look at the report of the company, what do you find? You find that to be monotonous. Yes or no? Yeah. So there was a discussion around this audit report. And if, let's suppose, you look at this audit process, see, the auditor will do a lot of hard work. Auditor may be spending months on the field, performing various procedures. But at the end, it all comes down to the audit report, which is given to the user, and the user will see that standardized document. So there was a concern once again that as a user, as a stakeholder, he will get to know that as far as the financial statements are concerned, if let's suppose the opinion is clean, so that means everything is good. But during the course of the audit, auditor may have faced a lot of challenges. Maybe the opinion is clean, but does it mean that he would have not faced challenges? He may have come across a lot of technical matters related to accounting, related to audit. Yeah. Does the user get to know about it? Answer is no. So idea was that this audit report should become interactive. It should not become that monotonous. Okay, so the users, the stakeholders should get to know about the challenges, about those critical areas which are there in the financial statements, which have come to the knowledge of the auditor, which the auditor would have dealt during the year. And that's where this CAM section becomes relevant. That's where this CAM section comes into the picture. So through this CAM, auditor is trying to communicate with the stakeholders. He's just trying to help them understand about what? About the matters which were of most significance during the audit. Okay. Those matters which required significant auditor's attention during the course of audit. Those matters which were communicated to TCWG, because that will definitely be important matters, yeah, critical matters, right? Now, in case of CAM, what do you do as an auditor? Generally, there is a thought process that if, let's suppose, something is reporting as CAM, so it's considered as if it's a negative reporting. But is that true? Can we say that is true in relation to the audit of the financial statements? Answer is no. See, CAM is not a separate reporting altogether, and CAM is not about giving the audit observations, right? CAM is not about giving the modifications in a different manner. No. So to deal with observations, to deal with misstatements, and to report the modifications, we have this separate requirement and we have this separate section. So that is not included in the form of CAM. So that's why it should not be considered that if a matter is reported under CAM, it's a negative reporting. Answer is no. See, only thing is these are the significant matters which are informed in a way to the users of the financial statements for their understanding, but it's not a modification of any kind. So that's why when you go to CAM, what do you find? First of all, auditor will explain why the matter has been considered as a CAM. So there are few criterias around it as we just discussed. And then the auditor will also be talking about in detail that how he has taken care of that matter. Okay, that particular area, if let's suppose that was of significant importance, okay, that was so critical, what all procedures he has performed on that. Okay, and because it belongs to the financial statement, so that's why somewhere in CAM he will also give a reference in relation to that matter in the to the financial statements, right? Because that must be reported somewhere in the financial statements. So these are the three elements of CAM which you'll always get to see, right? So now as a next step, what we can do is we can just look at this CAM in the audit report that we were just looking at, okay? And through which we will also try to get the clarity a bit in more detail around the CAM. But before that, I think what we can now do is we can take a break, and after that we will continue with this CAM and other sections as well. All right, so let's take a break and let's meet after the break. Huh? So if you go back to that audit report, okay, just a minute, I think. Right, so here we go. So now we will look at this CAM. So as we discussed, CAM is all about critical matters, okay, not an audit observation as such. And in this case, three aspects will be covered. Of course, why this has been considered as CAM to begin with, and what is it that the auditor has done. Means auditor will be discussing the audit procedures in relation to CAM, and then the auditor will be giving a reference in relation to that particular matter, because somewhere in the financial statements it must be reported, correct? So we'll just try to look at one example for this, okay, that will give us the complete clarity as to how this is reported. So if you look at this section, so it says CAM are those matters that in our professional judgment were of most significance in our audit of financial statements of the current period. These matters were addressed in the context of our audit of financial statements as a whole and informing our opinion thereon, and we do not provide a separate opinion on these matters. Right? Now, a reference is given. So what is the first matter? Revenue recognition. But in revenue recognition, here again, the auditor is very specific. He is not talking about revenue recognition as a whole. He is talking about one aspect of it, which is in relation to fixed price contracts, where the revenue is recognized using POCM method. Okay, for that, he is giving a reference of notes to the financial statements, so that the user can go look at this particular item in the financial statements as to what is that. Okay, now why this has been considered as CAM, so let's understand. Company engages in fixed price contracts wherein revenue is recognized using POCM method, which is computed as per input method based on company's estimate of contract costs. We identified revenue recognition of fixed price contracts where the percentage of completion is used as CAM, since, now why it's used as CAM? Since there is an inherent risk and presumed fraud risk around the accuracy and existence of revenues recognized considering the customized and complex nature of these contracts and significant inputs of IT systems. Application of revenue recognition accounting standard is complex and involves number of key judgments, estimates in mainly identifying the performance obligations, the related transaction price, estimating the future cost to completion of those contracts. Okay, these contracts may involve onerous obligations which require critical assessment of foreseeable losses to be made by the company. At the year end, significant amount of work in progress related to these contracts are recognized on the balance sheet date. Okay. So the auditor has explained the reasons for considering this to be a CAM. Then the question arises that if this matter was so significant, what is it that auditor has done? So now he's talking about audit procedures. Now, please understand, these are the audit procedures which the auditor would have performed. So over here, we are not talking about a general guidance. No. These are the specific audit procedures which you'll also get to see in the audit working papers. And these should always align. It shouldn't happen that in the old working papers you have some other procedures and you're reporting something else over here. No, it has to be same, right? Now, he's saying obtained an understanding of the systems, processes, controls for recording and computing revenue and associated contract assets, unearned and deferred revenue balances. So, can you understand that? See, this auditor is saying that when I have obtained understanding, that's a procedure. Yes or no? Now, that's how this audit is actually supposed to begin always. Because when you audit something, what do? You will always want to have an understanding around it. Only then you will get the clarity. Then you will be able to plan. Then you will be able to design the audit procedures. So, this understanding that you obtain, is it not an audit procedure? Answer is yes. Then he is talking about involvement of auditors expert. Who are those? IT specialists. They assess the IT environment in which the business systems operate, tested the system controls over computation of revenue recognized, tested the IT controls over appropriateness of cost and revenue reports generated by the system, tested the controls pertaining to allocation of resources, budgeting systems. Okay. Tested on a random sampling basis controls relating to estimation of contract costs required to complete the respective project. So he is talking about all the things. Yes or no? Right? He is talking about all the points which he would have performed as an auditor. So I'm not getting down to all the procedures now because that's not really relevant. Idea was to just give you a perspective of what this scam is all about, how this is required to be reported upon, and what all things are required to be included herein. Clear? Yeah. I'm just hoping you have got the clarity around it. Huh? Now, moving further. Now, the next section is about the modification. Okay. So now, at times, you may get to see modifications in the audit report. Now, what is this modification? Why are those required to be given? Let's try to understand that. And once again, what I'll do is I'll just take you to a separate document for this, which talks about the modifications. Okay. So we have this SA 705, which deals with the modifications. Now, as per the requirements of the standard, modification could be of three types. Now, you may be thinking emphasis of matter, other matter. See, those are not modification. What do you mean by modification? When there is a material misstatement. Very simply. If let's suppose material misstatement exists relating to any kind, can the opinion be clean? No. In such a case, opinion will be modified. Okay. Right? So now what are these three types? And when are these required to be given? I think that can be best understood with the help of this table. Okay, this table nicely covers all the requirements related to the modification under various situations that you may have. So now we are talking about a situation that the financial statements contain material misstatement. Okay. Now, in this case, when you talk about material misstatements, once again, we may have two situations around the material misstatement. Yes, around the material misstatement only, there could be two situations. So let's talk about those two situations. Now, what are those two situations that you may have? See, the first situation is wherein the financial statements are misstated. Let's suppose this is the set of financial statement. It is misstated materially. So what is the misstatement? Let's suppose a particular item in the financial statement, say for example, there is error in respect of, say, other receivable. Okay, so there is a misstatement in this material one. And let's suppose if you go to balance sheet, you have this item. If you go to P&L, so in the P&L, you may say that maybe the provisions around this. That is materially misstated. Now, in this case, if you look at this financial statement, there are a couple of items which are misstated. You have one in the balance sheet, you have one in the P&L. And maybe there are some disclosures around it which are misstated. Yes or no? Now the question arises that due to this misstatement, can we say that the entire set of financial statements is sort of incorrect? Means the impact of this item or maybe these items is such that it is flowing to the entire set of financial statements? The answer is no. Actually, if you look at it, so what do you see? You will see that the set of financial statements is fine except for these items. So if you take out these two items, there is absolutely no problem in the financial statements. Yes or no? Right? So you can say this is first category. And what do you mean by this? So you have a material misstatement. Okay. But its impact is not pervasive. What do you mean by pervasive? Means it doesn't flow to entire set of financial statements. Okay, so it doesn't flow to the entire set of financial statements. Okay, so that's not pervasive, right? So this is one situation. What is the other situation which is possible? Let's suppose you look at another set of financial statements, wherein let's suppose you have PPE. Okay, this is misstated. Fine, this is misstated. And if you look at this PPE, this comprises 80% of the balance sheet. Means such is the number. Now, in this case, one may say that this PPE is a single item which is misstated, but its impact is such that it actually covers significant part of the financial statements. Yes or no? So this is what you call as a material misstatement which is pervasive as well. Material misstatement and pervasive. So you can say the impact of this second situation is quite high. So this is more severe as compared to the first one. Yes or no? Yeah, as compared to the first one. Because that's the thing that you get to see in this case. Now, as a result of this, what will happen? As a result of this, our reporting requirement will change. So let's try to understand this now. So if let's suppose financial statements are materially misstated, okay? They are materially misstated, but it's not pervasive. It's not pervasive. Then what will happen? We will qualify the opinion. However, if the financial statements are materially misstated, wherein it's pervasive, okay, wherein it's pervasive, then we will have to extend. So then we'll have to get into a severe situation. What is that? Will not be limited to qualified opinion. We will be moving towards adverse opinion. Understood? Yeah. Because it's more severe as compared to the qualified one. Clear? Right? So we have discussed about two types of modifications in a way: qualified opinion and adverse opinion. Now, sometimes what may happen is you go ask for the information from the company and they are able to provide you everything. Okay, so anything you ask for, they provide you. Yes or no? So as far as the information is concerned, you have received everything to the satisfaction, means to your satisfaction, means to the satisfaction of the auditor. Okay. Satisfaction means as far as the information, receipt of information is concerned. Okay. And therein the auditor will find the misstatements, and those misstatements or maybe a single misstatement is material. Okay, so the auditor will quantify that, so he knows the impact. Why? Because he has audited, he has got the information, so he knows the impact, and the impact is material. At times it's material but not pervasive, at times it's material and pervasive. There is another situation which is possible. Okay, so this first situation that we talked about, we can call it as A, wherein the information was received to the satisfaction of the auditor. So information was received by the auditor to his satisfaction. Now what is the other situation? Let's call it as B. Now in this case, it may happen that the information auditor has been asking for is not provided to the auditor. So the information to the satisfaction of the auditor is not received. Okay. So you can say auditor is unable to obtain sufficient appropriate audit evidence. Right? So what does it mean if the auditor is unable to obtain sufficient appropriate audit evidence? Okay, what does it mean? What does it require? What do you do in such a situation? See, in such a situation, because the auditor is unable to obtain the required information, he may not be able to compute the exact impact. Because if the information is not there, how can he compute? Can he compute that? Answer is no. Yeah. In such a case, what will he do? He will have to get on to the possible effects. Yes or no? He will have to get on to the possible effect that if, let's suppose, this information is not received, what could be the possible impact of this item on the financial statements? Because he cannot say that I have the impact known. No, that's not known to him. So he'll have to get on to the possible impact. Okay. So now, what will he do? Now, once again, there are two situations which will arise under this category B. Either that possible impact will be material but not pervasive, or that will be material and pervasive. Okay, so in this B category, if let's suppose the possible impact is material but not pervasive, so he will give the same opinion qualified. But in case it is pervasive as well, then will he give the adverse opinion? No. Now he will be giving disclaimer of opinion. Okay, now what will he give? He will give disclaimer of opinion. See, whenever any modification is given, so you will find the way the auditor will communicate that qualification, okay, conveys this entire thought process to the users, to the stakeholders. And I think what we can do now is we can go through the actual audit reports of some of the companies with the modification, basis which hopefully you will also get that thought process. Okay, so let me just move on to some of the audit reports with the modifications. Let's try to understand that. Okay, just give me a minute. So first of all, what we can do is we can just pull out an audit report with the modification. Okay. So we can go to this audit report with the modification. Just give me a minute and let me just move on to this report.
Sure.
Right, so here we go. Okay, so I'll just share this one with you. Okay, so there we are. We are now talking about qualified opinion. So to begin with, what do you find? You see this language which the auditor is using. Okay, and you see the headers. So it says qualified opinion. So if you go back to the report which we discussed wherein the opinion was clean, so the header was opinion. Now you have qualified opinion. So if you look at this header, what do you get to know? Opinion is modified. It's a qualified opinion, right? So let's try to understand the language which the auditor will use and try to compare this with the language which was there in case of clean opinion. To begin with, auditor is saying we have audited the accompanying financial statements of the company comprising balance sheet, P&L, all those elements. Okay. Then he is moving on to the opinion para. In our opinion and to the best of our information, according to the explanations, except for effect of matters described in basis for qualified opinion section. The aforesaid financial statements give the information required by the Companies Act in the manner so required and give a true and fair view. Now you may be wondering that why there is a true and fair view? Because if there is a modification, then how can he issue the opinion saying it's true and fair view? Now that's where you need to be understand this carefully. See, in this case, he is not talking about the entire set of the financial statements. He is saying that if you look at the financial statements and if you take out these items, which he is saying except for the impact of this, everything else is fine. Okay, and that is the objective in case of a qualification, because you don't want to say the entire set of financial statement is bad. You are saying that only some of the things are not appropriate. Remaining set is completely fine. Understood? Right? So then in the basis for qualified opinion, he will be explaining some of those matters. Right? As to what is that. So he has given an example, maybe there are a lot of matters, so that's why he is talking about it. Now, as a next step, what we will do is, now we will look at one audit report with the adverse opinion. And we will try to check as to how this language will change if, let's suppose, you move on to the adverse opinion. Okay. So let me just share this report with you. So there we are. So once again, if you look at the header, from the header itself, you will get to know about what? Opinion is not clean. And about opinion means that the opinion is adverse. Okay, right? Next. Now, once again, he will start with the same language. We have audited the accompanying financial statements of the company which comprise balance sheet, so and so, all the components. Now comes the opinion para, and let's understand how the language will change. See, in the clean opinion, as well as the qualified opinion, what was he saying? True and fair view. Correct? Now let's read this para. He says, in our opinion, because of the significance of matters discussed in basis for adverse opinion para, aforesaid financial statements do not give the information required by the Companies Act in the manner so required and do not give true and fair view. Can you see this? Yeah. So now he's talking about the entire set of financial statements, that this entire set of financial statement is a problem to me. All this while, when he was talking about a qualification, this entire set was not a problem. He was saying entire set is okay. Okay, or the financial statement is okay if you take out those items. But now he's saying no, entire set is a problem to me. So can you understand how the language has changed? What is the messaging which he is trying to give to the user? So he's saying that the set which you are reviewing, okay, which is annexed along with the audit report, that doesn't give a true and fair view. Understood? Yeah. So the impact of the same.
Yes, sir.
Right? Prashant, you have some question around it?
No, sir. I said
Okay,
yes,
sure.
I've understood. Thank you.
Very good. So now let's also try to look at the disclaimer para. So if, let's suppose, there's a disclaimer in the audit report. So let's try to understand if there is a disclaimer para. Okay, just give me a minute. I'll just open the document. So if, let's suppose, there's a disclaimer para, let's understand how the language will change in such a case. So I'll now share this report with the disclaimer of opinion. Yes. So now moving on to this disclaimer part. So here again, with the header, you get to understand that the opinion is now once again modified. Now, if you remember, in case of clean opinion, qualified opinion, adverse opinion, what was the first para auditor was writing? We
We
have
have
audited
audited.
the financial statements, correct? Now let's understand what is the language he's using. He's saying we were engaged to audit. He's not saying we have audited. Why? Because he's saying I have not been able to audit. My audit is not completed. How can he say that when he has not got the required information? Can he say that? No. So he's saying we were engaged to audit. And if you go to this second para now, he's saying we do not express an opinion. How can he express the opinion when the information is not available? Yes or no? Right? So he's saying because
Yes.
of the significance of the matters described in basis of disclaimer of opinion section of our report, we have not been able to obtain sufficient appropriate audit evidence to provide a basis for an audit opinion on these financial statements. Yeah. So there's a huge difference in the language which you see in case of clean opinion, qualified opinion, adverse opinion, and disclaimer of opinion. Understood? Yeah. Hopefully you would have got the clarity now.
Yes.
Sure.
Yes, sir. Perfect.
Very good. So now let's move further. Okay, so now what we will do is we'll also touch upon these other reporting requirements, okay, which at times you get to see, okay, in the financial statements. And generally, it is considered as if these other requirements are also a kind of modification, which is not true. Okay, so there are only three types of modification that we have discussed. There is no other type. Now, what are these other reporting requirements? So one is emphasis of matter paragraph, other one is other matter paragraph. So what is that? See, emphasis of matter means you are trying to emphasize upon something as an auditor, not as a management. You are trying to emphasize upon something. How can you do that? Will you be writing that in detail in your audit report? Answer is no. See, you are the auditor. What will you do? You will audit the financial statements. So if there is anything in the financial statements which you believe is of such importance that it is fundamental to understanding of the users of the financial statements. So you are not saying that it's reported in an appropriate manner by the company. No. You are not saying it's a misstatement in the financial statements. No, because if there is a misstatement, if it is material, you will qualify. You will give adverse opinion. You will give disclaimer. You are not saying that. You believe that the financial statements contain something which is very, very important for the users to know. Now, let's suppose you are preparing for the exam. Okay, let's try to relate to this. And you are reading this entire book. What do you do? Okay, there are a couple of things you'll always do. For the purposes of your revision, you know when you'll have limited time to read, you will break your entire course curriculum into two parts, something which is important and something which is not so important. Yes or no? And some of the things which you'll read, which you find confusing at times, which you find important at times, what do? You will make a note of that, separate note of that, or maybe you will highlight that, you will underline that. Yes or no? That's what you will do. Why? Because you believe that is of importance to you, right? So in a way, you are highlighting that. So the same goes with the auditor. Now, in the financial statements, auditor believes there is something which is extremely important. But let's try to understand it from the perspective of the user. See, a financial statement may be running into, say, 50 to 60 pages. On the top of it, there is an audit report which may be running into, say, 7 to 8 pages. And maybe the users, the stakeholders, do not understand this financial reporting. It may happen that they are not familiar with this financial reporting, or even if they are, they may not be going through this complete set in detail. So that's why, what are you trying to do? You are trying to highlight a particular area in the financial statements to the users. With the help of what? With the help of this para in your report. So what is this EOM? EOM is basically a reference to something which is there in the financial statements. It may be recognized, it may be disclosed in the financial statements, which the auditor wants to highlight. That's it. Okay. Can we say it's a modification? No. So that's why auditor will also clarify this. That if you read this EOM, don't think it's a modification. Okay. But important part is EOM can only be given about something which exists in the financial statements. Why? Because if there is anything which the auditor wants to highlight and it's not there in the financial statements, how will he highlight? Possible? No. So EM is only possible for something which is presented or disclosed in the financial statements. It's a necessity. Okay, it's a mandate for the EOM, without which EOM cannot be given. Yes or no? Now, similar to this EOM, we have this another reporting requirement at times that you call as other matter paragraph. Now, what do you mean by other matter paragraph? Now, here again, what is the objective? See, the auditor wants to bring thing to the knowledge of the users of the financial statements. But in this case, the problem is that that's something which the auditor wants to bring to the knowledge of the users of the financial statements is not there in the financial statements. So are we saying it's a deficiency? It's a misstatement? No. It's not required to be given in the financial statements. So that's why it's not there in the financial statements. Because if it's there in the financial statement, he can always give you. Now, what about something which is not there in the financial statements, which he wants to highlight? So that is the part which he will cover, which he will take care through another reporting requirement called as other matter paragraph. Say, for example, auditor is doing the audit for 25-26. It's ABC and company. For 24-25, financial statements were audited by PQR and company. Okay. Now, auditor wants to convey to the users that the previous year financial statements were not audited by him. Those were audited but by somebody else. Now, let's think about the management. See, is the management required to include any such disclosure in the financial statements? Do we have any such accounting standard? Answer is no. So should the management be giving this in the financial statements? Answer is no. So that's why what will the auditor do? Auditor will include other matter paragraph wherein he will specify this fact. Okay, so now similar to what we did in case of modification, we will also go through this EUM other matter paragraph in the actual audit reports. And once again, our idea is very simple. Just to give you some clarity, okay, because if you go through the actual report, that's when I think you will get some more clarity in terms of how is that required to be put in place. So just give me a minute. I'll just open this actual audit report. Okay, so there we go. So I've got this report which contains both. Okay, so we have this single report covering both the aspects. So I'll just share this report with you. Okay. Okay, so if you go to the report, it has a similar structure. Okay, so you can see the order will always remain same. The language part you will generally find it's a report with clean opinion. Can you see this? Opinion is clean. Now after the opinion we have this emphasis of matter paragraph. So in this case auditor is not giving any explanation. It's only a, I think, one liner. Yeah, means one sentence. So auditor says we draw attention to note 2C of the financial statements, which describes in detail economic and social consequences, disruption company is facing as a result of COVID-19, which is impacting supply chains, consumer demand, financial markets, commodity prices, personnel available for work. Further, he is also clarifying. Can you see this second sentence? Our opinion is not modified in respect of this matter. This is very important, so that the user should not think that this is a qualification. Then you have this CAM, then you have this other information paragraph, then the management responsibilities, then you have these auditors' responsibilities. Okay. Then you have this report on other legal and regulatory requirements, right? And I think somewhere within this, you get this section about other matters. Okay, now what is this other matter? Now the auditor is saying, we did not audit the financial information of one joint operation included in the financial statements of the company whose financial information reflect a revenue of this, net cash flows of this amounting to so and so amount as considered in the standalone financial statements. Financial information of this joint operation has been audited by other auditor whose report has been furnished to us, and our opinion insofar as it relates to the amounts and disclosures included in respect of this joint operation is based solely on the report of such other auditor. Here again, see this sentence. Our opinion is not modified in respect of this matter. So he is saying it's not a modification. Okay. He's just giving a clarification in a way through his audit report in respect of this matter. Right? Okay. So now what we can do is we can just move on to I think some of the questions around this. So just give me a minute. Yes, so there we go. Below is the draft extract of audit report of a listed company. Para A below. So if you look at this para, so para A below reflects certain matters stated in audit report communicated with CFO of the company. Para B is in the nature of auditor's response to said matter. So let's look at para A. Company recognizes revenue when the control of goods is transferred to the customer at the net consideration which the company expects to receive for those goods from the customers in accordance with contracts, terms and conditions. Further, it says terms of sales arrangements based on the terms and conditions of relevant contracts and nature of discount and rebates create complexities that require judgment in determining revenues. Now, para B is the auditor's response to this, means the audit procedures, correct? We read the company's revenue recognition policy and assessed its compliance in terms of Ind AS 115. We assessed design, tested the operating effectiveness of internal controls related to sales and rebates or discounts. We tested on a sample basis that the revenue has been recognized in the proper period with reference to supporting documents, including confirmations from customers. From the description given above, identify in relation to what's been reported, what the auditors are trying to report, under what heading such matter should be reflected. So basically, you are required to identify that what is the section of the audit report that is covered. So in a way, the question has given this entire section of the audit report. You are required to identify that. Yes, over to you.
So it is regarding SS 701, key
Okay.
audit matter.
Very good.
So the key audit matter deals with the matters which were most significant, which were identified during communication with the TCWG. And
Right.
these were the most significant matters in the audit, which the auditor had identified, and how these were dealt with by the auditors
Right.
in respect of procedures performed on those
Right.
aspects.
Very good. So I think the moment you get to see the audit procedures in the audit report, there's no other section which will give the audit procedures in the audit report. Of course, in the work papers you'll see, but in the audit report you will not see, except for CAM. Yes or no? Yeah. So if you talk about this section, sorry, including this, you should immediately understand it's nothing but CAM. Otherwise, why will the audit procedures be given in the CAM? Yes or no? Next. PTD Limited is engaged in the business of executing construction contracts for its clients. There are non-current receivables outstanding in the financial statements of the company as at 31st March for 500 crore. Okay. So we have these non-current receivables outstanding. Amount is 500 crore. Right. Such amounts represent caused by claims raised by the company on its clients relating to cost overruns necessitated due to client delays, change in work specifications, and the related matters. Besides negotiations, company has also gone for arbitration in some of the said cases. Management of the company has considered the above amounts to be fully recoverable. Okay, which is also stated in the notes to accounts. CA Piyush, who happens to be the auditor of this company, has relied upon management representation in this regard. I think we talked about it. Besides, he has decided to include this matter in the EOM para in the audit report. Okay. How do you view the decision to include the above matter in EOM para by the auditor of the company? I am just hoping you have understood the matter, right?
Yes, sir.
Yes. Any thoughts, Prashant?
So, so can I have the previous page?
Yeah. So let me just help you on this. Just give me a minute. I think what we can do is we can just bring it down to a single page. Yes, so
Thank
I
you, sir.
think this should help you now, huh? Yes.
So, in this audit, the auditor has not been uh, considered the such amount claimed raised by has not been has relied only upon the management representation, and he has, in that view, in view of this statement, he has not obtained sufficient and appropriate audit evidence
Okay.
in respect of these claims.
Okay. So now in this case, what do you do?
I'm so so what I'm trying to say is that the approach of the auditor to include this matter in emphasis of matter is not correct, because emphasis of matter means emphasizing upon something as an auditor,
Right.
and which the auditor believes to be important and fundamental to the understanding of the financial statements.
Right.
So the opinion of the auditor is also not modified in respect of this. By
Okay.
putting the para in emphasis of matter paragraph, the auditor is
Right.
not modifying his opinion.
Right.
Since this amount represents 500 crores,
Yes.
and the auditor apparently has not been able to obtain sufficient and appropriate evidence regarding
Right.
this,
Right.
so it will come under disclaimer of an opinion, because the matter
Okay.
is, in my opinion, pervasive and
Yes.
material, and not sufficient evidence has been obtained, so he cannot give an opinion. So when there is no question of giving an opinion, when there is a question of disclaimer of opinion, there is
Okay.
there is no requirement of emphasis of matter. There cannot be an emphasis of matter para.
Okay. Good. So there are a couple of points to this. One, the reporting which the auditor has done, whether that is appropriate or not. If that is appropriate, then absolutely there is no problem. But if that is not appropriate, what is the reporting which should have been done? So in the given case, when you talk about EUM, what is the understanding that we have for EUM? EUM is basically something which is appropriately recorded in the financial statements and which the auditor wants to highlight. Yes or no? And that's why auditor will say that as far as that matter is concerned, my opinion is not modified in respect of that matter. Why? Because he's saying I'm just trying to highlight it, but don't consider that to be a misstatement. Yes or no? Now, in the given situation, auditor has first of all not obtained sufficient appropriate audit evidence. Why? Because as we discussed in the session on management representation, it's not a conclusive evidence, right? So just by obtaining the representation letter, there's a question mark on the audit, I would say, sufficiency. Forget about the efficiency. He has not performed any other audit procedure, which he could have done. He could have verified the contracts, status of arbitration proceedings, he could have checked. He didn't do that. Okay. Therefore, as far as this matter is concerned, we don't know as to what do you do as an auditor, means why do you want to highlight it? There's no point highlighting it. So if let's suppose there's a receivable, it's absolutely okay. What is there to highlight in terms of the receivable? There's no point highlighting it. So therefore, to say it's an EOM will be grossly wrong. Yeah. So this matter cannot be included in EOM. So the reporting which the company has done is clearly off. What should the auditor do? Auditor should perform his opinion by performing the, should form his opinion by performing necessary audit procedures, obtaining the sufficient appropriate audit evidence. Right? It is only when he concludes that the modification of opinion is not required, the said matter will have to be then looked at as to why this is of so significance which he wants to highlight. Okay, so he will have to also get into the assessment that yes, it's not a misstatement. As of now, the procedures are not completed. Okay, so it's not about that the information is not provided to him. So of course you will get onto a disclaimer when the information is not provided. So in the given case, can we say the information is not provided? No, it's not been asked for. So if it's not been asked for, why do you say it's not provided? It's a deficiency on the part of the auditor, not on the part of auditee. So that's why we will not be able to get into disclaimer as well. We will be in a situation wherein we'll say that it's going on. So audit is incomplete, right?
Yes.
Very good. So let's look at the next one. ADKS, they are the newly appointed statutory auditors of PKK Limited. During the course of audit, statutory auditors have come across certain significant observations which they believe could lead to material misstatement. However, management has a different view and they do not agree with this view of the auditor. Considering this, statutory auditors are determining as to how to address these observations in terms of their reporting requirement. I think it's a very simple, straightforward question. Yes. Your thoughts on this? Anyone? I can see Saminathan is also around. Prashant, you are also there. Yes, Prashant, please go ahead.
So, sir, see, the auditor has come across this material misstatement, and
Right,
management does not concur with the view of the auditor. So,
right,
auditor will have to evaluate and assess whether these material misstatements are material and pervasive, or they are material and not pervasive. Since
right.
the auditor has obtained the evidence, if he has obtained the evidence and he finds that they are material but not pervasive, he will straight away qualify his opinion. And
Right.
if he finds evidence that they are material and pervasive, then he will issue an adverse opinion.
Okay, good. Any thoughts, Saminathan, you have on this? Yeah. So let's look at this. See, when it comes to a qualification, what do? You'll have to find out whether there is a material misstatement or not. Now, there again, you'll have two categories. One wherein it's not pervasive, the other one wherein it is pervasive. Okay. Why? Because if it is not pervasive, you get on to qualified opinion. If it's pervasive, you get into adverse opinion. And if the information is not provided by the entity which the auditor has been asking for, and the impact which is possible is pervasive, then you get on to disclaimer. Okay, so that of course is the guidance. Now in this case, auditor will have to evaluate as to what situation he is into in relation to these three modifications. Wherever he finds himself to be in, accordingly the reporting will be done. Understood? Next, TUV Limited is a company engaged in the business of manufacturing spare parts. Saroj and Associates are the statutory auditors for this 23-24. During the audit, CA Saroj noticed that the company had a major customer, namely Korean Mart from South Korea. Owing to an outbreak of war and subsequent destruction leading to government ban on import and export in South Korea, the demand from Korean Mart for the products of TUV Limited ended for an unforeseeable time period. When discussed with the management, CA Saroj was told that the company is in the process of identifying new customers for their products. Okay, so the situation has got impacted. CA Saroj understands that though the use of going concern assumption is appropriate, material uncertainty exists with respect to identification of new customers. This fact is duly reflected in the financial statements by the company. How should this be dealt by the auditor? I think this is again something related to MUGC. Any thoughts?
So he will issue an unmodified opinion.
Okay. And when you say unmodified opinion, do we also have any other reporting requirement in respect of this?
So
So, yes,
auditor had identified that there is a material uncertainty
right,
relating to going concern, and specifically with respect of identification of new customers vis-a-vis due to the outbreak of the war, the Korean customer not being a existing customer now. So the management has made due reflection in the financial statements,
right,
and also they have addressed that they are identifying new customers.
correct,
So the auditor is satisfied with the management's uh, estimation and assumptions and the
right,
basis.
right.
So he will issue an unmodified opinion.
Okay, great. Any thoughts, Aminathan, on this?
Yes, sir. Good evening, sir.
Yes. Good
Sir,
evening.
in,
Yes.
in this case, yes, as rightly said by the Prashant, the thing is the going concern assumption is appropriate, and
Right.
material uncertainty exists with the identification, and they reported in the financial statement as well by the management is concerned. As far as the auditor is concerned, while issuing the report, he has to insert the paragraph called that material uncertainty related to going concern. He has to mention the about this fact about it. With respect to this, our opinion is not modified.
Very good. So
He has
I
to
think,
incorporate the. Yeah, thank you. That's it.
yes, very
So
good.
in the last,
Yes.
so you had said that we will not include this every time. That so it is with respect to. I got a slight confusion that I thought it will only be included when it is needed. I mean, so you see, if it is addressed also by the management, still we will disclose this in material uncertainty relating to going concern.
Yes. So I think if you can just go back to the discussion we had in the last session. Okay. And let me just quickly take you through that. Just give me a minute. Okay, so if you remember this flow chart, and there were situations we discussed, so we called it as A, this one as
Yes,
B,
sir. Correct, correct. So I have
this one as.
understood, sir. Thank you.
Understood?
Thank you, sir. I have got it.
So
Yes.
currently, which situation are we on? We are on
This,
B1.
yes, unmodified opinion with MUGC para. Yes, sir. Yes, sir. Yes.
Understood? Right?
Correct, sir. Yes, sir. Thank you.
Great. So let's look at the next one. Sun Moon Limited is a power generating company which uses coal as a raw material for its power generating plant. Company has been allotted coal blocks in the state of Jharkhand and Odisha. During the financial year 23-24, a scam regarding allotment of coal blocks was unveiled, leading to a ban on the allotment of coal blocks to various companies, including this company, Sun Moon Limited. This happened in the month of December, means during the financial year 23-24, and as such, entire power generation process of Sun Moon Limited came to a halt during that month. As a result of such ban and the resultant stoppage of the production process, many KMP have left the company. Obviously, yeah. There were delays in the payment of wages and salaries. Why? Because the financial has got impacted, and the banks from whom the company had taken the funds for project financing and also decided not to extend further finance or to fund further working capital requirements of the company. Further, when discussed with the management, statutory auditor understood that the company had no action plan to mitigate such circumstances. Further, all such circumstances were not reflected in the financial statements. What is the course of action you think auditors should take in this situation? In this case, if let's suppose you happen to be the auditor of this company, what do you do? Yes. Any thoughts? What do
There
you
is
do?
assumption of company we will discuss with the management regarding
Right,
their use of the going concern assumption and
right,
their evaluation of the going concern assumption, and then
right.
accordingly we will evaluate this and the indicators if the management has plans to, and as has management has prepared its financial statements on the going concern basis, and the indicators operating and financial in respect of this company show that the major resource is being stopped, and there is a ban on allotment of coal blocks, and all the KMPs have left. The bank loans are not being is secured, and the financial, there is a default in payments, all etc. Delay in payment of wages and salaries and the funds. So all these are impacting the financial and the operating cycle of the company, and these are the indicators which indicate that the company is not continuing as a going concern. That assumption is in doubt. So the
Okay.
use of going concern assumption is wrong in this case, and the auditor will ask the management either to perform realization accounting, or he will not issue this report, clean report.
Okay. So if the management doesn't do that in such a case, you are saying they will not be issuing the Clean opinion,
Clean.
correct?
Yes, yes.
Okay, sure. So, Swaminathan, anything you will want to add to this?
Yes, sir. As Prashant is rightly pointed out, there is a going concern, there is a inability to continue as a going concern. As he rightly explained, the ban of allotment of gold and the key managerial person is left, and bank is not ready to extend their finance, and all the key ratios and everything is going on the toss. Definitely, there is a going concern. Uncertainty is exists, and also it's inappropriately. They mentioned that say company is telling that it is a going concern is good, but they did not express this information into the notes to the account, or all the such circumstances were not reflected in the financial statement of the Sun Moon Limited. It is clearly mentioned in this question itself. So, in this case, definitely the auditor will issue the adverse opinion, because the reason is that the going concern is not appropriate, and also the management is not expressed their opinion in that financials. So, there is a warrant for adverse opinions in this case, sir.
Okay, good. So let's look at this. Now, following circumstances create a problem for the company. Okay, so there's a ban on the call block allotment, halt in the power generation, KMPs leaving the company, funding is an issue, right? And clearly, if you look at the action plan, management is not having anything. Now, in this case, what do? Going concern basis which the company would be following always, which is a fundamental accounting assumption. That seems to be inappropriate. Yes or no? Now, in the given situation, if the company is not giving the required disclosures and also not aligning the accounting requirements with this basis of going concern as inappropriate, the impact is not only material, right? So the impact which you see on the financial statements, can we say it's not, sorry, is it's material? Answer is yes, but that's not only material, that's also pervasive, right? Why? Because it flows to the entire set of financial statements. So your entire balance sheet is changed. That's one. Okay. Then because your balance sheet will change, so all of this impact will flow to the P&L. So your P&L will go for a toss. Your cash flow is impacted. And there is a significant disclosure deficiency. So if you look at this entire set of financial statements, that is materially misstated. So that means we get on to a situation wherein we have a material misstatement and it is pervasive. Okay, so in that case, what should the auditor do? Clearly, he should express adverse opinion, right? And in the basis of opinion paragraph, statutory auditor should state that a material uncertainty exists that may cast significant doubt on entity's ability to continue as going concern, and the financial statements do not adequately disclose this matter. Yes or no? Yeah, clearly. Further, if you look at the requirements of CARO, therein you have this specific clause. Yes or no? Yeah. Auditor also required to report in CARO about what? On the basis of financial ratios, aging, expected date of realization of financial assets, payment of financial liabilities, other information, about what? Auditor's knowledge of the director's management plans. Whether the auditor is of the opinion that no material uncertainty exists as at the date of audit report, that the company is capable of meeting its liabilities. Okay, which doesn't seem to be in place. Clearly, yeah. So that's why this additional reporting will also be required. Understood, right? So actually you can say it's a significant reporting which will have to be done in the given situation. All right, clear? So with this we are
Yes, sir.
through. Thanks once again for your time, and of course for this wonderful participation that you've shown. Thanks so much once again today, and we'll meet next. Just make sure you're revising the stuff. Huh? Thanks so much.
Thank you very much, sir. Thank you very much.
Thank you, Ashok.
Thank you, sir.